Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today on my podcast, I have Justin McIntyre. Justin is an experienced mortgage professional with a demonstrated history of working in the financial services industry. Welcome to the podcast, Justin.
Thanks for having me. Happy to be here.
It's a pleasure to have you on. I wanted to kind of start off things by just jumping right into it. And I wanted to kind of get a good understanding and have my listeners get a good understanding of what got you to become a mortgage broker. I know a lot of people have different ways of getting into the industry. Some people knew that that's what they're going to be when they grow up. Some of them kind of through friends and family kind of saw the industry and entered that way. Give us kind of the history or the story behind how you kind of got into the industry.
So growing up, my father was a big numbers guy. He's a millwright by trade, so he's always dealing with measurements and whatnot. And his big stress to my brother and I growing up through high school and whatnot was that our math was going to be used on a daily basis. Mm-hmm. So math was always part of our daily life and a big stress to us. I could tell you about the lectures we got when we brought home our report cards and our gym mark was higher than our math. It wasn't a fun dinner time, but nonetheless, it was all in good. He was just trying his best to prepare us for the real world, and taking that into account, I took a couple years off of high school, deciding what I wanted to do. I decided to go back, and I took corporate accounting. So I went to the education route. My brother went to work, and every day we're both still using math. He's in a distribution center for the largest distributor of video games in Canada. Mm-hmm. So he runs a distribution center, so he's always breaking down pallets and figuring out counts and whatnot. So math is in there. I spent about 7.5 years in the corporate world, and then decided it wasn't for me. I worked for not the nicest people in the world, and I decided that I didn't want to be like them. I didn't want to grow up and be always on call and not rewarded, and just seen as the grunt. Mm-hmm. So I was kind of in between what to do, and a family friend who is a top broker in Atlantic, Canada, kind of talked to me and edged me towards taking the course. And, I got licensed in 2016, and here we are.
So, but I mean, just to backtrack a little bit.
Sure.
Did he ever start a business?
No.
Okay. So has your brother anybody in the family started their own business?
No, everyone's worked for an employer. Yeah. I'm the only entrepreneur.
So how did because I mean, the reason I say this is because entrepreneurship is a very different animal than the corporate world. Corporate world has its own ups and downs. Entrepreneurship has its own ups and downs. But one of the biggest, I guess, fear factors, and I guess you could say fear factors, you could argue that is an illusion of security in the corporate world, is that every 2 weeks you're getting a check, and you're getting paid. Whereas when you go off and you work for yourself, that's not always the case. There's an uncertainty there. Yeah. How did you kind of get the courage to be like, you know what, I've got a paying job and I'm gonna quit this, and I'm gonna go into the unknown. And the reason I say this is because there's a famous quote by Elon Musk. He's like running your own business is like chewing glass and looking to into the abyss. so so what made you make that transition from okay, I'm not gonna do this. I'm gonna try my hands at this.
Well, it comes down to the fact that I didn't want to be like my bosses, and I was in the corporate world and doing mortgages on the side. So I was doing both, and then I was spending more of my time in the boardroom writing client notes on the whiteboard,
Yeah.
taking a picture of it, erasing it, and then getting back to it later at night. And it just got to the point where I was doing more mortgages during the day, and then still doing my work. And then it was just kind of like, okay, things are at a point where I think I can make that jump. I also had a great support system. My wife, who is my high school sweetheart, she was kind of pushing me, and she's always cheering me on and making me try to do better and take those
Mm.
risks, those calculated risks. Because I'm a very logical guy. I don't
Yeah.
just jump without thinking of all the negative things that can come from it. But her parents and obviously my parents were very supportive in everything I did. But even after college, I had a hard time getting a job, so I started a detailing company. So I was
Oh,
doing
nice.
car detailing. Then
Mm.
that transitioned into HID headlight sales, and so I guess from that standpoint, it was kind of like, okay, I can figure out a way to be my own boss and not have
Yeah.
to report to someone
So,
on a daily basis.
safe to say, so this wasn't your first entrepreneurial endeavor. You've had a few in the
Yeah,
past, and you're kind of like, and you transition into it. You didn't go kind of just jump into it and see how it
right.
goes.
Yeah.
That's awesome. So then, with your mortgage team, I guess I want to change gears a little bit and kind of jump into what it's like working with you. And I know you're sitting in your office, but I know with COVID, a lot of things have changed. Some
Yeah.
people used to only see people in person. They still do, and some people will do it only online. Is your kind of mortgage experience any listeners if they ever want to reach out to you? Is it only an online experience? Is it an in-person experience? Can you walk us through what it's like from beginning to end, taking out a mortgage, and how they should be reaching out to you?
Yeah, it's obviously COVID changed a lot of things. You would know firsthand
Yeah.
with being able to now digitally sign with lawyers and whatnot, where it wasn't really streamlined before. So it opened up a lot of doors. But before COVID, I would try my best to make an appointment with clients because I am helping them with their biggest financial decision that will probably happen in their lifetime. I think it's only right that we meet face to face at least once. A lot of people did enjoy that, did like it, whether it's over a coffee or lunch or whatever it was.
Mm-hmm.
But people have busy lives, and there's not always time for that. I have clients that I've done 3 and 4 transactions for that we've never met.
Oh
Um,
wow.
yeah, it's just because I am licensed across Ontario, so I
Yeah.
have clients as far as out east of Ottawa, Smiths Falls,
Mm.
Niagara, Temiskaming Shores, Windsor, London, right? So they're all over. But I tend to try to let the clients guide.
Mm-hmm.
If everything's done through text message, then I'll continue that way. If everything's done on the phone, then that's the way we communicate. Email, same way. Everything is streamlined now. The mortgage software that I use has its own client portal. Every client gets access to that portal to upload documents to. That way, they don't have to email it because emails get lost, attachments get messed up along the way, and then they forget what they've sent. So the client portal actually has a checklist that goes through. It tells them what they've uploaded. They can review the document. Once I've
Mm.
reviewed it, I can actually check it off on my end so that they can't edit it anymore, and they see that I've actually reviewed it. So it's COVID kind of helped streamline a lot of things in that sense. And like I said, I just kind of follow the guidance of the client. There are still
Yeah.
clients that want to meet at least
Yeah.
once, shake hands over signing even if it's the final compliance documents, everything else is good to go. It's just the final compliance. Then, I'm open to that. I
Yeah.
enjoy getting in front of people. I enjoy meeting people.
Yeah.
That's kind of where I thrive is just chatting with people and building those relationships.
I mean, and I also think that portals nowadays are incredibly important. They're so useful now, and I think that before COVID, nobody used them, or there's few out there.
Yeah,
But COVID accelerated it, what was
for
already
sure.
being created. And instead of like sending back and forth a million emails, you can kind of go online, upload, and then even it's good for the clients too because they see, hey, I've already sent Justin this. I need to send him A, B, and C instead of saying, hey, did I send him this already? And then they're sending out like 30 emails. You're getting 30 emails. You're trying to kind of go through it to see if everything's okay. So with that, it like streamlines so much of it that it's like it's such a great convenience.
Mhm.
Um, before so once you collect it, you then I'm assuming so you have your and let's just backtrack a little bit. So you
Yeah,
have you meet with them in the first I guess meeting however they want. So they could be online, Zoom, it could be phone, it could be
yeah.
whatever they want. Okay.
Text message,
So,
email,
yeah.
Facebook.
Yeah. So you collect all their documents.
Yeah.
And then do you have a meeting pre-collecting documents and then a post maybe a meeting for example after the post after you've collected the documents you're like all right you go shop them around and then you say hey here's what your options are or how's your approach in all of that.
We kind of discussed that in the initial conversation because
Mm-hmm.
I like to set the expectations from the very beginning.
Mm-hmm.
I'm a very much, part of my expression, but no bullshit kind of
Yeah.
guy. So I tell it the way it is, and my wife can attest to that. I'm brutally honest at sometimes.
Yeah.
I was too honest. So I set the expectation from the very beginning, kind of get an understanding of what clients want, if we're going fixed variable, what the rate expectation is, what payments are going to look like, what affordability is, and all that sort of stuff. Because if it's way out of whack, if they're expecting to pay $2,000 and because rates keep going up, they're actually into the $3,000 range and they can't
Yeah.
afford that, then there's no point in wasting their time doing an application, collecting documents, and all that. So the expectations with me are set at the very beginning. We kind of go over what the rates are, and then from there, I already have my couple lenders that would be willing to look at the file. Once everything's good, I send it off, get the commitment back, send it off to the clients. We go over it together if needed, if they have any questions, and then submit that over. And then once we're broker complete, do the compliance, which is all the final documents to make sure that I am compliant based on the province's guidelines. Everything's been disclosed, and we do the final signing from there.
Yeah. No, awesome. And one thing that I really just want to touch upon what you just said is that you have a few lenders. And I find like that's something that if somebody ever was to come to me and ask, like, should I go to a bank or a broker? I say hands down broker every single time. Not that I have anything against with the banks. Being a real estate lawyer, we do the last leg working with banks all the time. But with banks, you're going to one lender. When you're going to a broker, right, you're going to 100 lenders, and you're leveraging their relationship. So chances are the lender that you're going to reach out to with my file may be the same lender you reached out with five other guys, and they understand you as Justin as a person who does A, B, and C, and they kind of understand they have a relationship with you directly, as opposed to me who's going into the bank every 5 years and they're not going to see me again. That relationship is just isn't as strong. So I always recommend brokers are the way to go because
Sure.
there's so many different types of products. There's so many relationships that they've built, that they've established, and brokers only pull your credit once, and they go to like 5, 10, wherever. I don't know what it is, but you'd know better than I would. But you go to a few lenders, or the lenders, and you know what they will accept even before submitting it.
Yeah.
You know kind of what their boundaries are because you have that relationship. But you're only the clients are only pulling their credit once. If they went from like even 2, 3 banks on their own, not forget about the time it would take to go to 3 banks.
Yeah.
But then you're getting your credit pulled every single time. So every single time you get to a bank, your credit is worse than it was in the last bank.
Yeah, yeah, and that's the thing, right? Is we don't know. Sometimes there's issues with a property,
Yeah.
and this lender won't lend on it. And a perfect example is my buddy about 6 years ago, 7 years ago, bought a place out in Whitby,
Mm.
and I had to go through 4 lenders to get him a deal because the first three said no because he was too close to a gas station.
Oh wow. Yeah.
Right.
Yeah.
So it's one of those things that I don't know that lender is not going to do that because of a gas station. Like the gas
Yeah.
station, what they shared properties, but it was the back of their backyard and then the back of the gas station's property. So the pumps weren't near the house or anything.
Yeah.
The first three said no. Now, if someone had gone to those three lenders initially, then they probably would have given up,
Yeah.
right? But I already had all the documents, I had the file, I had everything. So they said no. So I went, okay, submit it to another one.
Yeah.
Then just kept going down until finally one's like, yeah, okay, no problem.
I
They had
mean,
no issues with it, and it was
yeah.
approved. And it's just
Yeah.
it's one of those things. You do the work once, and
Yeah.
then I in the background can do it 3, 4, 5, 6, 7 times if needed.
Yeah. No, and I don't think, and you brought up a wonderful point, because sometimes when people are buying the house, they don't realize what else goes into it.
Yeah,
There's gas station. You could buy something next to a river and you think it's the most beautiful, like, scenic backyard you have, but then you realize maybe the proper construction isn't there for insurance to insure it, or to completely insure it, and then you have to go to different types of lenders, and the lender that you thought was going to give you the mortgage isn't, or even like something crazy like I know that old dry cleaning units where they used to dry clean in the unit, because now I think they send it off. But if you have a site where they did it on the unit, it's similar to a gas station where you know that that environmental report for that
right.
lot isn't the best. So these
Yeah,
are things that like I don't think people really understand, and that's why even when like everybody was going kind of going crazy, I think
selling
last
price.
year buying places, and they're like, you know what? So I went on a calculator and I saw that I'm approved for $5 million, right? And I make 50,000, and now I'm gonna go buy whatever I want and give a firm offer.
Yeah,
I was like, whoa, hold on. First of all,
yeah,
you're gonna get approved twice. You're approved and the property's approved, and you're not even approved right now. So it's
and
always in those situations that I always say, go to a broker, because, like you said, right now, you could set, you know, the expectations. You're setting the expectations in the beginning, right? Like before you even submit it, you kind of understand, and you're not basing it off of, hey, this person told me he makes 50,000, 100,000, 200,000, because you know better than I do that every dollar is not the same when you're trying to get a mortgage.
for
It
sure.
depends on how you got it, where it's coming from, how often,
Yeah,
and where it's deposited. There's a lot of things that happen for you to like get the amount, and you know better than I would that it's always like I myself being in the industry, I'm not gonna lie, I'm not even like 20% certain of how the calculations are done. So somebody who is not even in the industry definitely needs to reach out to a broker to kind of understand all of this.
100%. And that's one thing that I try to do is I try to educate people along the way, right?
Yeah.
Whether you're a first time home buyer or you're on your fourth or fifth rental property, there's
Yeah.
still things that you think you know that you don't, because rules are changing all the time. Guidelines are changing all the time,
Yeah.
right? One thing that people don't understand is like what you touched on earlier is you're pre-approved, but that doesn't approve the property. People don't understand that the financing clause protects you against anything
Mm.
with the property as well. I had a client who was pre-approved, and they bought a house that was in between a major highway and a railroad tracks, right? And it needed a gut, and he went firm. And I'm like,
Mm.
first of all, I don't advise clients to go firm. I advise the opposite. But people think that they're pre-approved, and that's golden, which it's
Yeah.
not. And he learned the hard way. He had to go private because no lender would touch it because of the marketability of the property,
Yeah. And
right?
privates
And
are expensive.
yeah, and those are the decisions that people make. And or when you get into appraisal values, you go firm at 1.3 million, it appraises at 1.1. Now you got to come
Yeah.
up with that 200,000 because you went firm,
Yeah. Two hundred
right?
thousand plus any other additional percentage down payment on the appraisal
Yeah,
note. So
yeah,
so
like it's just crazy, and that's why we'll never advise people to go firm. And I actually try to get the property that people are looking at before they put an offer in, just to see if there's any issues that I can see from the MLS page,
yeah.
right?
A lot.
Obviously, pictures don't show the whole story,
Yep.
but
100%.
there's been a few times where I catch something and it's like, hey, what about this little leak over there?
Yeah.
Like, oh yeah, I didn't even notice that. You did a
Yeah.
walkthrough and you didn't notice it,
Yep.
right? Because people just get caught up on the cabinets and the floors.
Yep. And
But
they're
I'm
so busy, like just wanting to be in a house
yeah,
that they forget that this is not a chocolate bar. You're buying something that's pretty expensive here.
yeah. And my wife and I did the same thing when we were buying our house.
Yeah.
We put offers on 8 houses and lost 7 of them
Yeah.
because
Yeah.
one, the main reason is we weren't going firm, and I'm in the industry.
Yeah.
I still would not write a firm offer.
So was your last offer the firm offer, or it wasn't a firm
No,
offer? Yeah.
No, it still wasn't. I gave myself 2 days financing,
Yeah. Yeah.
and that's because I pulled a favor from someone who I
Yeah.
had a relationship with.
Yeah.
It was
Yeah.
11 o'clock at night, and I was on the phone with my underwriter saying, "Hey, I'm sending you my file tonight. I have 2 days."
Yeah.
And it
No.
was at 1 o'clock the next afternoon. The file was broker complete.
Oh, nice.
Right. So,
That
and
has to be some
and that's
record.
yeah, and that's the beauty of the relationships that I get to build with these
Yeah.
people is, every once in a while I need a favor.
Yeah. No, I mean, I saw a lot of people going in firm, and I was just, what would end up happening is it's kind of like similar to your scenario, but not the same outcome. So people would go and put in offers at five, six, seven, whatever, 10 houses. And then towards the end, they'd start going like, you know what, I can't do this anymore. I'm just going to start doing firm, and they're going above listing. And it's like, you have to be patient. You have to be patient. And it does not matter what is going on. You have to stick to your principles, and you have to be working with people with principles, so you understand that you're hedging any kind of mistakes that could happen. Because private loans, again, I don't have anything against private loans. I think at the right time they're wonderful
Mhm.
product to take out. But if you're buying $1 million property and you have to take out a private loan, that's gonna kill you.
Not even including the lender fees and the lawyer fees, right?
Yeah,
You got two lawyers and the lender
yeah,
fees and broker fees attached, but just the interest on that and your interest only payments, non amortizing. It gets expensive real quick. And
yeah,
you're 100% right that you have to hedge the relationships of people, because if it wasn't for the realtor that we were working with, we
yeah,
wouldn't be in this house that we're in.
yeah.
We had gotten frustrated and fed up with everything because one house that we had really high hopes for accepted a bully offer the day that we had an appointment. So
Oh
we
yeah.
just said, you know what, screw this, we're done, because it was too much of an emotional roller coaster. I actually deleted all the House Sigma app, the Realtor app from my phone. I told our realtor to cancel out another appointment for later that day because we were just frustrated. So
Yeah.
she canceled the appointment and she called me back and she convinced us to go. She gave us a gentle nudge, as she would say. And we stood in the kitchen and I asked my wife, how does she like the house? And she says, yeah, I really like the house. I said, okay, put an offer. So at first
Yeah.
we did go over list and 2 days financing, and we beat out the one other offer,
Oh, nice. I
right?
mean, yeah,
So
the sentiment, and this is, I'm assuming this didn't happen the past year, but because the past year market's changed.
no, it was at the in November 2020 when we got it accepted. So just at the beginning of everything
Yeah,
going
no,
crazy.
I mean, the entire COVID era was just an insane kind of roller coaster, and it is difficult. I feel for buyers because, again, buying a house, it's not like it's buying a chocolate bar. It's not like, oh, I didn't like the taste of this, I'm gonna get another one, or what am I in the mood for? It's like you go in, you get attached, you got a family, you're like, okay, this is where my kids are gonna be, this is where you envision yourself, and then it kind of breaks, and you got to envision yourself somewhere else, and it drains a lot from you. But at the same time, that shouldn't get you to make foolish decisions just so that you're just emotional about that entire process.
100%, and that's kind of what it was. Was it this house checked most of the boxes. The price point was good, and we kind of tugged at the seller's heartstrings because he had homemade cards from his nieces saying
Hmm.
happy birthday to him, and he had pictures with them. So we're like, okay, maybe we can kind of pull at those. So in the notes, the realtor put that this is our first house for our young family. We have a daughter that's turning 1 at the end of January, so we were asking that we get the house 10 days before her birthday, right? So we're kind of tugging at those heartstrings. And did it work? We don't know. Was it just the money and the 2 days financing, where the other offer? The other offer was firm, but I just don't think the money was there.
Yeah.
So obviously we'll never know. But
I
it's
mean, you
kind of
got to give it all you've got, and then hope for
yeah.
the best.
And like I said, it checked all the boxes. It was a new house. He was the first owner. It was only 2.5 years old at that point. It
Hmm.
was so, it's just, and we fell in love,
Yeah. No.
right?
But now I want to kind of change gears again.
For sure.
So I kind of want to get into. I know we're already kind of talking about it. We're in it. But I wanted to go into more market questions because I know, at the time of this recording, we just got another rate announcement this morning, and and
As expected.
yeah, as expected, Bank of Canada has bumped up interest rates 50 basis points. So my kind of question to you is, this is a crystal ball question, so, and I'm going to hold you to it. So where
Please
do you
don't.
we're at the end of 2023, okay? I don't think anybody, or sorry, 2022. I don't think anybody thought a year from now we would be where we are today, right? Like nobody
No.
imagined this many rate hikes.
The Bank of Canada said they weren't going to touch the prime rates until 2023.
Yeah.
That's what
So
they kept telling us. So, as brokers and agents, that's what we were passing on to clients. And because of the spread of the fixed rates and the variable rates at the times, it
yeah,
allowed people to stress test and afford more house.
yeah,
So, it pushed people to variable rates because of the way
yeah,
the stress test is set up. So now everyone's feeling the pinch,
yeah,
right? And it's hard because you got your variable, your VRMs and your arms, whereas one is a static payment. So no matter what happens to interest rates, as you know, interest rates go up, the amount that you pay to principal interest just kind of shifts, but
yeah,
your amortization spreads out.
yeah,
So a lot of people are hitting their trigger points where they hit a certain point in amortization where so much needs to go to principal, and then they have to shrink that, increase payments to shrink everything back to where it should be. And people are getting hammered.
yeah,
Their, you know, $1,800, $2,400 payments are now going up to $3,700 like that.
yeah. No,
Whereas
I mean,
people who aren't on static payments have been gradually feeling the increase because their amortization is staying the same.
yeah, it's been an unprecedented jump, at least within recent history.
For
Sound
sure.
like interest rates haven't been here. I mean, to be honest, we saw like some crazy rates. I remember some banks doing, I think, 0.99% on a 5-year fix or something ridiculous like that. But from our desk, we saw like 1.3, 1.2, 1.1 was very common. The thing behind that was it's great rate, but at the same time, this is unprecedented. 3-4%. We're still not at the highest rate. I think for a decade in like the 80s, it was in double digits. So we're still not there. Now, my question then to you is, where do you think we're going to be a year from now?
Yeah. Well, I can tell you that there's going to be no more rate increases this year,
Okay,
right?
because there's no more meetings.
So that's all I can say. But they're talking about this is going to be. There's rumblings that this is going to be the last increase,
Okay.
based on a few articles that I've read and words that are coming through the pipeline. That this is going to be the last increase, and you know, early 2023, we should start seeing prime coming down. Now, what's going to happen with the war that's happening, and
Yeah.
you know, the logistical issues and supply chain and all that sort of stuff that's helping raise inflation, we don't know. Like you
Yeah.
said, it's a crystal ball, and mine seems to be broken.
Yeah.
Um, like many brokers out there, right? So
Yeah.
I'm still pro variable. We're personally on a variable, so we've been feeling the crunch, and that's kind of what I've been telling all my clients that are calling me and saying, "Should I fix? Should I switch to fixed? Should we lock in?" And it's like, well, the rates are going to come down. It's
Yeah.
just a matter of when.
Yeah.
So if you want to switch over, be paying in probably in the mid fives, maybe you know 5 3/4, depending on what the lenders are at the time, for the next 3 4 years, then that's up to you. You have to do what's best for you.
Yeah.
Um, you know, then you don't have the ability to save money in the future,
Yeah.
and that's what it comes down to. And before I put people into a variable, I ask them, like when they ask that, everyone asks me that question: what do I suggest, fixed or variable? And I say, do you go to the casino? And
Mhm.
if they say yes, I say, okay, do you walk in with $100 and go to the high roller tables, or do you walk in with $20 and go to the penny slots?
Mhm.
Right? And based on their answer is where I direct them. If they say, no, no, I just go in and, you know, my friends are all the gamblers, I just watch and have a couple beers, then, you know, obviously you're not a gambler. You should stick to fixed. You like it to be secure.
Yeah.
So, you know, hindsight's 2020. Should a lot of people have gone fixed when they were in the, you know, 2.2, 2.5 range? Absolutely. But, you know, like you said, we don't have a crystal ball. We can't
Yeah.
tell the future.
But we're not out of it yet. The thing is what I find interesting is that a lot of people are panicking, rightfully so. A lot of people's payments are going up, and it causes a lot of issues, right? Because going from like 2,000 to what you just said, $3,700 a month. I don't know how many people have that kind of, fluff in their income that they can afford that much extra payment. And time again, it's not like it's like a 1 month set it and that's it. It's every single month you're paying that. Your payments just changed.
Yeah, well, it's
Um,
been 7 times that payments have increased
yeah,
for those
yeah,
clients, like myself included, since March,
yeah,
right? So it is a lot, but then that's sort of what the stress test is built in for, right?
yeah,
So everyone's stressed that contract plus 2%.
yeah,
Now, for those variable rate people, was 2% enough? No, not really. But for anyone who's coming up for renewal that signed a contract in 2018, 2017, then that 2% is spot on. I went back and looked before this meeting just to see because I was curious myself,
yeah,
and rates were in the mid to high threes, right?
mm,
And that's what everyone forgets is pre-COVID. That's where we were as well. We
yeah,
were a high ratio, which is the lowest rate you can get. We were sitting at I think 384 ish,
mm,
375 in and around there. So we're not completely out of whack. Like rates have just dropped, so now we're a little below 5% on a high ratio deal at the time of this recording. Prime's going up, so variables going up, but fixed are coming down because of the bond yields.
yeah.
So it's kind of a weird time because normally rates kind of follow each other, but now they're kind of going
All
like
over the
this,
place.
and nobody knows where they're going to end up.
Yeah. So when you said a few minutes ago, you said that prime is going to come down. When you say prime is going to come down next year, are you saying Bank of Canada rates are coming down, or are you
Yeah,
saying that the
that's
margin that the
who
banks
sets
are?
the prime rate. So prime
Okay.
rate is set by the Bank of Canada, and that's who dictates where it is. So
Yeah.
right now, we were at 595 this morning, and then after the announcement, that brings us to what 645, right? And pre-COVID, we we're at 395.
Yeah.
So, and I always said to clients, I think that's where they're going to end up. They want to be back to the pre-COVID numbers because that's where the economy was just humming along and things
Yeah.
seemed to be moving, at a normal pace. But with inflation, the last couple of months, it's actually been lower than previous months at 7%, 6.8 or something like that. Whereas in I think June, as it May and June, I think we were in the eights.
Yeah.
So spending has slowed down, but now we're in Christmas time and everyone's buying, 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 and then you got the media talking about a recession, so nobody wants to buy a house because they're still fixated on these 2% rates that they could have got,
Yeah.
but
Yeah.
then they're paying 200 to 300,000 more for a house. So when you look at the actual payments at 5% and 2.5%, and the values of homes that have come down, you're within a couple $100 a month,
Yeah.
right? And
No.
that's what people kind of have to realize.
Yeah. No. I could not agree with you more. I find it extremely interesting how, especially with first-time home buyers, where everybody's kind of looking for the interest rate to come down. When the interest rate comes down, actually, the price of the house is going to go up. And
Yeah,
my thinking is, when you offer a price for a house, let's say like it's 800,000 now, interest rate comes down, it's $1 million. That 200,000 is not going to disappear. You always will have to pay that 200,000. You bought it for $1 million now. Whereas if you pay a higher interest rate and you pay a lower price, as soon as the interest rates go down, you can refinance and actually bring down your price, but you don't owe that extra 200,000. So it's
yeah,
never, it's about your payment. And for me, I feel like it's about your payment firstly, because that's how
yeah,
people make those decisions, is how much can you afford. And
exactly.
then secondly, it's about the principal that you owe, because that principal will always be there. That interest rate will fluctuate, which people get very fixated on. But the principal, you have to remember that the reason, for example, that payments, like you said, went from 2,000 to 4,000 to whatever it is, right?
Mhm.
Is because of the principal. It's not just because of the interest rate. There's two kind of inputs here.
Yeah, and that's sort of what we try to tell people is don't live in the interest rate, live in the payment,
Yeah,
right? And I never like to see people go all in on a house. I don't like people when they they saved up $80,000 and they're putting $80,000 down on a house.
yeah,
I don't. I try to advise people not to because things come up, right? You're going to
yeah,
want to renovate. You're going to have to pay to move. You're going to want to decorate. You might want to buy new furniture and all that sort of stuff. So seeing people go like to their max is something that
yeah.
makes me uneasy because you never want to see somebody stressing and struggling to put a
Yeah.
roof over their head.
No, 100%. So I wanna kind of wrap this off with one last question, and that question is, and this is going to be again not a crystal ball question. I guess it's more of an expertise question.
All right.
Um, for first time home buyers, I know a lot of people are like scared. They're like, oh my god, interest rates are going up, this and that, whatever. Even repeat buyers are kind of on the sidelines, but I do feel like repeat buyers are a little bit more mature. Maybe they've seen a market like this before and they kind of understand what they're doing. But for first time home buyers, I feel like there is a lot of fear here just because they haven't seen anything. And when you haven't seen anything, when you're uncertain about things, naturally you're going to be scared. So, what are your kind of top tips for them on how to approach this and how to approach 2023 in terms of buying a house? Should they postpone it further? Should they start thinking about it? Should they be actively looking? Like, what's kind of your perspective, and what are some tips that you can give them?
I think there's an opportunity here. There's an opportunity to capitalize on lower prices. If people are afraid of rates, then sign a 1 or 2 year at a higher rate,
Hmm.
and then when rates do normalize, switch lenders and get a better rate at that time. But at least you're getting in the market, and when, as you said, prices or rates come down, values start going back up. You're automatically building equity.
Yeah.
So there's a saying that the best time to buy real estate was 5 years ago. At
Yeah.
any point in time, the best time to buy real estate was 5 years ago because real estate is a long term game, right? You're not, unless you're a master flipper and you're going to renovate and do all that sort
Hmm.
of stuff, then you're building equity for your future, right? It's not that you're going to get rich off it by buying a house and then selling it in a couple months and going back to renting, right? You have to live somewhere. You have to pay someone's mortgage. It might as well be yours,
Yeah.
right? And with the rent rates going through the roof because people either can't buy because of the pricing of houses or they don't want to buy. Rentals have gone up just because simple supply and demand, and housing
Yeah.
starts aren't picking up like they used to because builders aren't building because of the inflation on lumber, right? Lumber
Yeah.
was fluctuating like crazy, right?
Yeah.
And builders were afraid to sign contracts, or they were amending contracts after clients signed on the dotted line because lumber prices went through the roof. So by the time they got all the framing done, the price had gone up by 10 or 15%.
Yeah.
So it's scaring a lot of people, and the media is talking about all this doom and gloom and this crash and this bubble and all this sort of stuff. But it comes down to, do you want to buy a house now or do you want to pay more for it? And you might be priced out, right? So that's
Hmm.
why I'm saying there's a window of opportunity here, in my opinion, to purchase and get in the market.
So you're saying that first time home buyers, your tip would be to actively start looking.
Yes. Have the
Yeah.
conversation, see what payments and affordability looks like, obviously, first.
Yeah.
Because people always do it the reverse way. People
Yeah.
go shopping, they get online, they call up the realtor,
Yeah.
they go shopping, they fall in love, and then like, all right, we'll figure out financing. Or they plug it into a calculator.
Yeah.
And just a quick example is someone who gets child tax benefit. They get $1,000 a month for their children from the government. They put in $1,000 per month, but they don't realize that we can only use a portion of that based on the kid's age and how much of the total income it is.
Hmm.
So automatically that could come down. They put in their credit card balances and their payments at $40, but they don't realize we have to use 3% of the outstanding balance. So instead of being a $50 payment, it could be a $110 payment, and that could affect affordability. Right. So there's all these little nuances that we have to remember and that we have to tweak in the background that most people don't understand.
Yeah.
And that's why we are in the position that we're in. Right.
Yeah.
This is all we do. For most of us, this is all we do.
Yeah.
I don't sell mutual funds. I don't do life insurance. I don't do banking accounts. I don't do anything. This is all I do.
Yeah. No, and
So
this is, first of all, I couldn't agree more with everything you've just said. But to your point right now, this is one of the biggest reasons why I always advise to go reach out to a mortgage broker. If you go to a bank and if you find somebody that is doing your mortgage, again, I don't have anything against banks, but if you find somebody who does your mortgage, if they're really good at what you're doing, by the time you come in and you renew 5 years later, they're not going to be there. With a
yep.
mortgage broker, if they're really good at what they're doing, they're still going to be there.
For
and
sure.
they're gonna understand, like, you know what, like, you buy your first house, you buy your second home, you buy your forever home, you buy an investment property, a cottage, you need a credit line because your kid's going off to college, whatever it is, whatever you need, right? You don't, with a mortgage broker, you're not worrying about, you know what, is the person still going to be there? The person knows you. If I speak to Justin, Justin knows what my situation is. He knows my family. He knows my risk profile. He knows over the years what I've done and can give the best solution. And that best solution isn't with one lender. It's what's the best solution from the 100 lenders that you have available to you at your disposal.
Yeah, 100%, right? And it just to add to that is the people at the bank for the most part get a salary.
Yeah,
So whether your mortgage funds or not, they couldn't care less. And again, not to rag on the banks because we do deal with banks. Not all of them, but we do deal with three of them.
yeah,
And it's just one of those things where we get a commission only when the deal closes. So you should be assured that we're going to push as hard as we can. I know I will push as hard as I can to get someone in a house if that's what they really want. If I
yeah,
can make the numbers work to their
yeah,
benefit, then I'm going to.
yeah,
Right? And yeah, the relationship building is key because I have clients that, ironically enough, we live on the same street now.
yeah.
So the first time I met them, their son wasn't even walking, and now he's in grade one. Right. So I've been there and they bought their first house with me. And then we just did a refinance to pull out some equity when rates were low and
Yeah,
values were up. So they're like, let's
yeah,
tap into the equity and let's just have a safety net. Right. So, and they'll drive by and they'll stop when I'm outside with my kids or whatever and say hi and we'll chit chat and whatever. So, and those are the relationships that, it just kind of adds to the benefit of doing what I do.
yeah, yeah. No, you know what? Thank you for coming on, Justin. For any of
Pleasure.
my listeners who want to reach out to Justin, depending on where you're listening from, I'm gonna have his contact information either on below or on the side. Check him out. Make sure, like we discussed, it's all about the team that you have, and reach out to the team prior to kind of going out. I think it's a wonderful time to buy. So reach out to Justin if you are looking for a mortgage. If you are, even if you have a conversation, if you want to have a conversation on buying a home and what it's like, I would encourage you to reach out. Again, his contact information is either on the side or below, depending on where you're listening from. Thank you for coming on the podcast, Justin.
Thanks for having me. It was a pleasure.